rough illustration of how high time frame and mid time frame looks like, where of course in the ongoing uptrend on the high time frame, we can see that there's an impulse up, a down leg impulse, a up leg impulse, and so on, right? Whereas in the mid time frame, one impulse for the high time frame might be equivalent to about three swings, three factor swings in the mid time frame. And then when there's down leg on the high time frame, there's another factor movement again on the down leg. So for our high time frame, usually it's from H4 onwards, right? Yeah, of course known as our anchors, where we ask ourselves, what's the general trend or the direction of the market? Is price touching any high time frame demand or supply levels? So is there any high time frame liquidity that has been swept? So if a buy or sell side liquidity has been swept, there can be a potential swing trade that may help us, right? And what's of course our long-term target to go for? Whether we can target, is price going to form a new higher high? Is price going to form a lower low on the high time frame? And what does this translate into our mid time frame? So in our mid time frame, which is our M15 and M30, the purpose of them is that they are our intraday narrative. What's the storyline in the intraday, basically? So is our ongoing order flow, is it a bull trend or in the counter trend leg of the high time frame, right? So if it's bull trend, where is the potential high time frame zones to target? Is it going to form a new higher high or a new lower low to continue the ongoing high time frame trend? Whereas if it's a counter trend, then within the external leg itself, right? Where is the premium or discount level that price could target, right? So is it so we'll basically see what's the external range and to see like what is our potential risk reward from there. And next also is our liquidity areas that we can look out for. Be it buy or sell side liquidity, namely the two that we can look out for is all of our internal range liquidities within the external range itself, or if there's any structured liquidity that markets could target first before moving where it needs to go. And lastly, our low time frame, namely M3 and M5, which is our execution time frame. So this time frame, the only analysis for this time frame should only be for execution purpose, which is to refine our entries. So refining entries, what it just means is that we want to tighten our stop loss and to make it as small as possible, right? And doing this is the sole reason for us doing this is that we want to improve our risk reward as best as we can, right? To improve our profits. So basically, the general rule of thumb for this is that if price hits a mid time frame point of interest, then this is where we can zoom into this low time frame, M3 or M5, to look or wait for factor shift or shift in the low time frame trend for more confirmation entries. So confirmation entries normally is that when there's one chalk and there's one break of structure to the upside, right? And conversely, this is the other one, right? A chalk and break of the structure to the downside. Then we take the ongoing retracement again. So of course, the magic pill to this is that if the high time frame zone and our mid time frame zone do coincide together, these zones can be very powerful, and this can be considered as another potential confidence that which you can use, right? If we start back off the weekly level as well, we can clearly see that, right? These are our zones. This is the supply zone that was drawn before, and this was of course the ongoing weekly demand level which we has highlighted. And going back to the H4 level as well, these are the rough zones that we have drew. This is H4 demand level. There's a brief reaction followed by a break. And of course, these are all of our supply levels which we have identified, right? So we can see here that though the general trend at this very point of time was still a downtrend, but then of course, once price did react of this H4 supply level, we can see that there is some brief reaction before price continues to go up, right? So the likelihood of this level breaking is very high, right? So to answer these questions, right, general trend, it was down, but heading towards the upside. Is price touching any HGF zone? So it was touching a H4 level at this very point. So has any high time frame liquidity been swept? So on this Monday itself, we can see that at this very point, right, like price was ongoing away to the upside, where of course there is a small reaction of this liquidity here, right? Because this, if we look in our mid time frame, this was a liquidity that was taken. So on our high time frame at that very point, right, Monday did swap this level. So this level of sell side liquidity was swept, right? This level was also swept, but this is more of a mid time frame liquidity. There's a high time frame liquidity right here, right? Buy side liquidity that's being swept. So what markets? Yeah, so these are basically the potential liquidities that we could have identified. So potential targets that we can go for. So armed with this rough information, right? Because this supply, normally when there's a few touches, it is eventually bound to break in the process as a whole, correct? So what we can potentially estimate is that if this H4 level does break to the upside, we can safely target this level here, right? This is our next supply zone because there's some buy side liquidity over here that's being present. Or if like there's a reaction here and price do indeed want to mitigate, conversely, price could have came back to this level before coming back up again. Because this zone coincides with this count levels, right? It can be an inverted, price could potentially come here, sweep all this liquidity level here as well, retest this. So this can be a potential breaker block of this level before price can go up, right? So this could be a potential price movement at that point of time, right? So for now, we go on to our M15, right? So we can see that now at this very point, right? Because this was what price did that on that Friday itself is that price eventually did sweat this entire liquidity. So the very last point of liquidity was somewhere at this level here, right? The mid time frame, the M15 level. So there was indeed a sweep of this level. Price break back to the upside, and it made its way back up again, right? So when we do like play price forward as a result, we can see that price do come back here. So at this very point, of course, this was basically essentially a fair value gap that was being present, right? So because at that point, since this was already a fair value gap, and price, there was a pretty strong reaction, a mid time frame reaction at that point. So we can safely say that this essentially potential buy side liquidity that price can potentially target, right? So at this very point, now let's ask ourselves this question, right? Like the order flow, is it bull trend or counter trend? So we have roughly established that based on our H4 time frame, even though back then it was considered still a downtrend, but the ongoing leg, we can argue that it's ongoing uptrend already because there was this strong impulse and price is just reacting off this supply zone, right? It's not showing any signs of any strong reaction to the downside, right? So that's why at this point, we can say that the order flow is bull trend. So if it's bull trend, where are the potential high time frame zones which we can target? Okay, so there's a few things, right, we can argue because this was essentially the H4 level that price was targeting. So at that point of time, like the safest bet would have probably to target this extreme level, which is all the way, if we draw from this H4 zone, right, we can potentially target this. To be safe, we can potentially target at this level. But if we want the very last candle, we can potentially target this zone here, right, which is the extreme end of the current H4 zone. So this can, because we have established that the order flow is bull trend, which is going to the upside, we have also established that this is the potential zone we can target, right? So we can therefore, on this day itself, it's pretty clear that a long setup was going to become, was to look out for already at this very point, right? So now, of course, with that, let's just roughly play price forward. So we can see, right, that over here already, there was a very decent break in structure here to the upside, right? There's a break in structure to the upside. So it's very definite that this is our potential short-term target. Of course, if price were to just impulse up straight to this target, then our long setup might have been invalidated as a result already because this might become internal range liquidity. But till then, before this target is hit, we can safely wait for retracement somewhere here, right? So we can see, to answer the next question, right, is price currently at the premium or discount zone on the external range. So our external range at this point, right, the immediate level can be here to here, right? Because there are two entry models which we can look out for and which we could potentially look to enter our longs from. Because one, it can just be this. So this is where, when there's a presence of this internal range liquidity, then we can just draw our flip accordingly. So these are basically discount levels, right, that we can look to go long. So this can essentially be our potential setup over here as well, right? Because this can be seen as a liquidity. So this is basically what our entry model does look like at this very point itself. So if we do the same thing at this very level, we draw a flip from swing points from here to here itself, we can see that there's a liquidity POI that's being present at this very point, right? So we can potentially put our level like somewhere over here. So our stop loss, it can be just behind the 78. We can put it in between the 70 and the 78 level. We can potentially target at this high, which will give us around 7R, around there. So if we do place price forward, right, we can see that there's some sort of reaction here, and price came up again. So this is where there's some reaction at this very point, and we, of course, got tag in, right? Bull trend. So this is a typical bull trend move as a result. So price is just maneuvering around here. So if you want to look at it like if we just want to do a risk entry, we can is totally valid as a whole because this is a bull trend move and we are taking with the trend itself, we are technically still riding the wave. So in this aspect, let's say if we were to just rewind back and we want to look for a low time frame confirmation entry itself, right? So we can potentially look at it on the M5 itself. Okay, so let's just go to M3, like even lower, right? For more refining. So when price does hit our zone already, our point of interest, right, at this very level. So we can see that, right, there's a breaking structure. So this is sorry, this is a chop. This is basically a potential change in character. This is a sweep. So this was a sweep of this liquidity. And there's another breaking structure here. So by the time price we trace back to this level here again, right? This is where we might have more confidence to potentially take our trade, right? Because this is where there's low time frame confirmation entry, which we can use, right? So we can potentially target at this ongoing level here. So this is where uh, low time frame can be used to help us refine our entry, right? But of course, mid time frame would also be decent enough because since this is still a bull trend move, right? So if we do bar replay and play price forward, we can see that price was still like this supply was still holding on. So in the event where, of course, this supply does hold on and price do break this structure as a whole, what might potentially happen is that, of course, it can potentially come back to here again, right? So instead of this being the range that you look for, you might shift your Fibonacci all the way till here, right? Because this is technically where the 78 or 70 level is at. You might potentially shift your limit order at this count level instead to take a second attempt basically to our ongoing trade, right? Because over here there is this internal range liquidity that's been present right here, right? That markets could potentially go off after. So this is a potential setup that can still happen, right? As a result. But then of course, needless to say, of course, this didn't happen as price did continue its way up all the way again, right? So it did eventually hit our target over here at the extreme zone. So this was basically the Monday's trade, continuation trade move. Thankfully, it's very smooth, right? Because once there's a tap of this extreme zone, price there's a strong reaction that came off immediately. But this is where, of course, in my time already, it's around quite late in the evening. So this was when I was done trading. And at the same time as well, this was when the London session was closing already. So supposedly only the US market is on the hold at this point. So this is where, because chart just decided to, this was where I chose to exit on itself, right? So this is one beautiful example which we can of course look at and as to how we can look at multi-time frame analysis as a whole. So as you can see for this previous example, this is a pretty textbook pro trend move, right? Where once there's a break in structure to the upside, all we needed to do is just wait for retracement to the discount level after the respective liquidity has been swept before we continue taking it to the upside. Right. But what if in another scenario where instead of a bull trend, like we have to deal with a counter trend move? So if we do play this forward briefly, right, we can see that of course price did eventually broke to this H4 level. And of course there's a huge reaction off accordingly. Right. So when it came here, there's a huge reaction. When it came here, there's a relatively huge reaction. So at this very point itself, right, like what we would have potentially done is like we would have potentially waited for a confirmation of for some form of supply chain to reform at the very least before we can consider a potential counter trend move. And even if say there is a counter trend move, right, this is where looking at the external range, looking at the intraday narrative range is important itself. So in this scenario, when there's a counter trend move, if it's counter trend, where is the premium or discount level that one could be targeted? So because this is an uptrend, we'll be looking for a discount level that where we can target it, right? So since at this very point itself, we need to play price forward, right? We can clearly see that on this day already that there's a very clear supply. Supply is clearly being respected, right? There is one level right here, and there's a tag in here where buy side liquidity was taken, reacted accordingly, and price just retraced itself, right? So this is a potential cause for, of course, us to look for external range that discount zones which we can target. So at this very point itself, like we can immediately identify this level, this very extreme level itself, because this is the zone that we exit to break all the way to the H4 zone itself, right? So this is a potential like structure liquidity which we could potentially target as a result, right? So if we do, of course, play price forward from here, right, we can see that there is indeed a break in the internal structure to the downside. So likewise, we can potentially do our continuation trades from here as well, right? This is a potential valid trade that, right, I did mark up this Fibonacci to go into a premium zone where we can go for shorts itself. Then as we can see that this is as well an area of interest, right? This is where we can potentially put our short order. We can look for our shorts at this very point itself, right? Because if we do our bar replay accordingly, we can see that, of course, did price did eventually tag us in, but there was a slight reaction before price started to come out. So again, of course, once price do from here, it's sort of expected to have this entry model where I'll just draw it briefly. So it's something like that, right? So this is where, of course, our internal range liquidity was the last point of internal range liquidity at this ongoing leg was taken, right? But what if, of course, in the event where this gets breached instead, right? Like if price choose to, instead of taking out this level, price choose to take out this level, or even the very extreme, the very last point where price choose to take out all this internal range liquidity, it was very difficult to tell at that point of time, right? So of course, like we can potentially we just let the trade run, and we can see that I clearly got taken out at this very point itself, right? So since this internal range, there wasn't much reaction to this internal range liquidity already, it's very likely that, of course, this entry model has failed. So it is very likely that price can form this entry model or even this entry model. Like it is very difficult to tell at that very point, right? So this has sort of became a targeted buy side liquidity that price could have captured, right? So a few things that can be done at this very point, right? Like we can potentially mark out that zone itself. So there was a reaction, internal demand was still holding. And we can see that price very beautifully tagged this level after this liquidity was swept, right? So this was where like a limit order could have been placed. So if we want to be safe, we can cover this potential external high at the zone, right? So we can see that it was very beautiful, that the trade setup did eventually play out. So for of course, like if you guys actually saw my Telegram analysis as a whole, right? Like I did fumble a bit with this setup, but because maybe it's probably because of my poor trade management or my probably for my side. But that's another topic for that's basically for another video. So this is where like the entry models do came in handy, right? Where of course the reason why we have a sell narrative, which is technically a counter trend, is because on this day itself there was a supply chain holding, right? So when there's this supply chain holding at this rare point already, what I look at that point was to find any potential external ranges of the previous leg itself that price could potentially react. Because at this rare point as well, if you go back to the H4 zone, this is essentially there was essentially a breaker block or a flip right off this level here as well that was taken off this zone, right? So this could be a potential level which we could have targeted as well if it's a high time frame zone for our retracement, right? So this was, and at the same time there was some potential liquidity, sell side liquidity that we could target. This was one point liquidity targeted, another point liquidity target. So the external range was basically this. So minimally these levels might have been considered. And at this very point as well, like if we were to draw a flip level of this zone as well, we can see that at this very point itself, at the price did hit all the way till this discount zone. So if you are at the discount zone of an external bid with the ongoing trend, like you might potentially argue that like you can potentially take a confirmation entry right off this level to continue the ongoing trend, because this is where the ongoing trend comes from, right? So this is basically another example of how counter trend. So just to briefly recap this setup, so order flow at this very point was already counter trend because supply chain did help. So if it's counter trend, we are looking for the discount level to target, which is along this previous external leg is all the way till at this one of this level. So price went on to target this whole internal range liquidity before continuing its area. So liquidity areas that we can look out for, structured liquidity is at this point. Internal range liquidity is basically at this point that was available. So you might potentially ask like, why is this the chosen external range? Why is it not all the way at the bottom here? Why is it not all the way at the bottom here? Well, it could be at the bottom, but because at market move in cycles as a result, right? So normally what markets will normally do is that it'll target one point before it comes up, target another point before it comes up again. So this was the liquidity that at this point of time, only this was confirmed. This low was essentially considered a strong high, a strong low, because this low was the low that has previously taken out the previous high itself. So that's the reason why this has a very low chance of being targeted or being taken out. Hence, at that very point of time, the target was just this internal range liquidity within the external leg itself. This was a discount zone which like I was previously targeting. Our general trend is still a bull trend move. So if we do play price forward on the Friday itself, we can see that price immediately recorrected itself after this liquidity, structured liquidity in the range was taken, right? So it came back all the way up here. And this is where, of course, the high is expected to get broken, which it duly did. And eventually this is going to be our high time frame target, right? So as usual, we can do the same thing as well. We can potentially just draw off our fib. So the first fib probably would have been from here all the way to here, right? But then because now there's a potential break in the structure. So because this technically our range is all the way at the external from here to this point. But if we of course target from this level here, right, we could have potentially caught a beautiful trade here at a discount zone within this leg. But that's fine. So now since price has broken structure to upside again, we can just weekly draw. So price did came up all the way to this level. So this is potentially the zone which we could draw our levels at. So price came back up all the way here. So there was a slight reaction. We can see that somewhere along these lines, we could potentially look for potential continuation trend all the way up to this very point itself, right? To target this level on its own, right? So as we of course play price forward, we can see that this level, our price entry we have indeed got tagged in as a result. And this is another continuation trade, which this is potentially the continuation trade that we will look for. So why is it this level? It's the same thing as well, right? Where of course internal range liquidity was being captured. Internal range was this being captured because most traders might have just entered over here when there's a reaction of this demand, but not knowing that this is a potential inducement, because when there's a corresponding reaction here, internal range liquidity was going to be targeted, right? So we can potentially argue that, of course, this could be a potential leg that we could look out for, or like price can potentially come back down till this level or till this level, right? Before it comes back up to here. But what's for sure is that this high time frame zone is probably going to be one that will get targeted as a result. So with this like examples which I've gone through today, I hope that you guys better understand like how the different time frames sort of reacted according to one another, and how you guys can like can use this knowledge to our advantage as a whole, right? Because like on the high time frame level especially, right, all these levels, they are potentially bound to be any reaction, right? Where H4 is our anchor points, and in our mid time frame, these are all potential intraday narratives which we can use accordingly to help us get higher quality trade set up.